America's bond market shaken. Is Donald Trump's game over? The bond market, once considered the safest haven for the world's biggest investors, has now become a center of fear and anxiety. The United States, long viewed as the most trustworthy economy on the planet, is beginning to lose the confidence of those very investors. Is the impact of the tariff war so deep that America itself is turning into a risk for global investors? Have President Donald Trump's policies rattled the world's strongest bond market to the core? And if this continues, could Trump's political future also drown in this financial storm? In this story, we'll uncover what exactly has gone wrong in the US bond market that has drawn the world's attention and why it's turning into a nightmare for Trump. But before we dive in, if you are new to our channel, don't forget to subscribe so you never miss any of our latest updates. Let's begin today's discussion without any further delay. The tariff war between the United States and China is no longer just a trade conflict. It has now shaken the very roots of America's economic foundation, the bond market. When a nation's economy begins to wobble, investors typically flock to safer assets. But this time, the opposite is happening. US government bonds, once considered the ultimate safe haven, are now being sold off at a rapid pace. Major investors, fund managers, and international financial institutions are offloading bonds once thought to be the most stable and trustworthy. This trend is highly unusual. Typically, when markets decline, investors turn to bonds due to their lower risk and fixed returns. But now, instead of investing, people are fleeing the US bond market. Why? Because they no longer see America's financial policy as stable. And this fear isn't just psychological, the numbers confirm it. Just last week, the 10-year US Treasury yield stood at 4%, but it suddenly jumped to 4.58% before dropping slightly to 4.5%. Such a sharp rise and fall in yield indicates major volatility in bond prices. And when yields go up, it means bonds are being sold off. This level of instability is a red flag for financial markets, especially when it's happening in a country like the United States. This isn't just a story of numbers, it's overshadowed by a deep sense of fear. Experts believe this is not merely an economic indicator, but also a political warning. Prominent fund managers like George Cipollone have stated that confidence in the US as a safe investment is beginning to shake. He clearly warned that if the world's largest and most stable bond market becomes volatile, it would send deeply troubling signals to the global financial system. And the biggest political blow from this situation could hit President Donald Trump. The instability in the bond market has already forced him to reconsider some of his decisions. Trump himself admitted that he imposed a 90-day pause on tariffs because the bond market was flashing warning signs. The anxiety of investors made it clear to him that escalating the tariff war right now could be too risky. Historically, such behavior in the bond market has triggered major political upheavals. Take the UK, for instance, when Liz Truss announced major tax cuts and the bond market reacted negatively, she was ultimately forced to resign as Prime Minister. Now, the US seems to be standing at a similar crossroads. If Trump's policies continue to shake bond market stability, it could seriously threaten his political future. The strength of the US bond market has always been its status as a global safe haven. Whenever a crisis erupted anywhere in the world, investors would turn to the US. Whether it was the 2008 recession or the COVID pandemic, America's bond market stood strong as a sanctuary for global investors. But now, America's own policies are shaking that very trust. This situation has a direct impact on the cost of borrowing for the US government. When bond demand falls, yields or interest rates rise. That means the US government now has to pay more interest to borrow money. As a result, the budget deficit is likely to widen, putting Trump administration's economic plans under pressure. Financial experts warn that if this bond market volatility continues, the impact won't be limited to the US alone. Since the US dollar is still the world's reserve currency and US Treasury bonds are held by central banks globally, any loss of confidence could shake the entire financial system. The tariff war has already strained US-China relations, and now its impact is clearly visible in global markets, especially at a time when the US economy is grappling with inflation, unemployment, and political uncertainty. Investors are beginning to question, is America still as stable as it once was? In bond market terms, this is being called a confidence crash, a breaking of market trust. And this erosion of confidence is most damaging to America's global image. If this trend continues, US bonds could lose value, pressure on the dollar could increase, and the very foundation of global finance may begin to shift. The flip side of this instability is that investors are now eyeing alternatives, such as European bonds, Japanese government securities, or even gold and cryptocurrencies. This means the trust that once firmly rested on the US economy is now being openly challenged. A country that once symbolized economic strength and reliability is now under scrutiny from global investors. At a time like this, the Trump administration finds itself in a highly challenging position. On one hand, it wants to maintain a tough stance against China, and on the other, it must ensure domestic economic stability. But if every policy decision starts spooking the markets, the administration could soon find itself caught in the middle of a financial storm. The volatility in the bond market cannot be taken lightly. It signals that major investors no longer view the US as reliable as they once did. And for the world's largest economy, a crisis of confidence is one of the most dangerous scenarios. Adding to this concern is the fact that foreign investors are also pulling back from US bonds. Countries like Japan and China, historically among the biggest buyers of US treasuries, are now reducing their exposure. This means that America will need to rethink its policies quickly or risk sliding into a deep financial crisis.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.